Welcome to our presentation. My name is Joe and my partner is Yu. Today we will present to you about one important theory of the corporate accounting, that is, events after reporting period. After that, we will provide to you about one small case study of use passion to help you understand more about the event after reporting period. Firstly, what is the definition of the event after the reporting period? As you can see on this picture, which are the red line that indicates the event after the reporting period, which occurs between the reporting date and the dates that the financial reports are authorized for issue. There are two types of events, adjusting and non-adjusting events. Adjusting events are those that provide evidence of conditions that existed at the end of the reporting date. However, the non-adjusting events are those that are indicative of conditions that arose after the end of the reporting period. And now, our blog will provide to you one small case study of Use Passion. Use Passion Limited is a famous magazine publisher for fashionistas located in Ho Chi Minh City of Vietnam. The company signed a contract with Phạm Việt and has invested large amount of money, time, and other resources to nurture this celebrity as their official model. The entity's current fiscal year end was 13 June 2014. However, until 1st October 2014, the board of directors authorized for the financial statements for issue. During April, Use Passion received subscription fees in advance of publication on 1st August. The customer placed orders of 2,000 magazines of 70,000 VND each. The printing process for August issue was completed on 10 July and was ready for the delivery.
Unfortunately, on 15 July, Phạm Việt, the main model for August magazine, had a sexual harassment with 18-year-old girl. This event has exposed a huge scandal in Vietnam showbiz, tarnishing his previously pristine image and the company reputation. Then the bad came. Youth Fashion could not publish the August issue as the bad news of their celebrity endorser spread quickly in public media. They had to cancel all orders and refund the subscription fees paid by the customers in April. As a result, the company had to deal with 2,000 unsellable copies. To make matters worse, the customer monthly subscriptions slipped significantly, and it seems that Youth Fashion was unlikely to find other models for the magazine endorsement as the psychological effect of the scandal. In addition, by the end of October, the company received information that they may have to settle some legal issues relating to the scandal. Before we come to the solution, let's have a look at 3 issue questions needed to be considered before deciding whether it is an adjusting event or a non-adjusting event. First of all, we have to determine whether it is an event occurring after the reporting period. Secondly, does the event relate to a condition that existed at or prior to the reporting date? Finally, how to disclose the event in the financial statements.
In relation to the case study of Use Passion, the scandal of the company's model as stated above occurred on 15 July 2014. Therefore, it is an event after the reporting period. The condition did not exist at 30 June 2014. Furthermore, prior period figures will not be adjusted because they were made in good faith, so it should be classified as a non-adjusting event. For decision-making purposes, Use Passion would be required to disclose the details. For example, the nature and the estimate of the financial effects of this non-adjusting event as a note to the financial statements for the year ended 30 June 2014. The financial effects are the refund of 140 million VND to the customers, which is relevant to access future cash flow of the entity, and the return of 2,000 unsellable copies.
The legal issue settlement is not an event after the reporting period because the information was received after the authorization date, which is 1st October 2014. However, we should take into consideration that the severely tarnished reputation together with the expectation of large trading losses and legal claim for the time to come in Youth Passion's operation may call into question the going concern status of the company. If it is considered that Youth Passion is no longer a going concern, the scandal and its consequences become an adjusting event, and the financial statements for the year ended 30 June 2014 should be prepared on a liquidation basis. This is the end of our group presentation. Thank you for your attention.